Hey, it's Kathy Fettke, co-host of On the Market, presented by Fundrise, and I'm here in Salt Lake City for the Best Ever Conference. This is a conference mainly for commercial real estate investors, mainly in multifamily. So I went around and just interviewed some people you may have already seen on Bigger Pockets, to find out what they learned at this conference and what people are talking about, what the vibe is for real estate this year. Are people optimistic, pessimistic? What are they going to be looking for this year and next? So come with me, let's do some interviews. All right, Amanda, you are here at the Best Ever Conference and you are here to speak about taxes. So let's talk about that. Is there anything new or exciting we should know about for 2024 and beyond?
Oh my gosh, so much.
So much? I didn't expect that. I thought you were going to say boring. No, good stuff.
Matt and I were here talking about how to use taxes to raise money for your real estate. So tax benefits for passive investors. And we started our conversation about what are the proposed tax changes that are coming up from the Biden administration, a lot of which includes increasing tax rates, reducing or limiting our ability to sell a property and defer the taxes via 1031 exchange. And I think not a lot of sponsors knew that, or a lot of investors probably didn't know that. And what was really interesting, we shared a fact that after the end of next year, tax rates are actually going to be increasing from 37% to 39% automatically. So that is not a proposed tax change. That's actually going to happen if there are no other legislation changes. And I think people were pretty shocked by that. But I think from the bright side is today we still have all these tax benefits of bonus depreciation, 1031 exchange. So I think for us to, similar to what you're talking about with like the shift in the market, there's also a shift in tax law. So we really need to take advantage of those while they're still available, because once they're gone, they're gone. We're not the ones to make up the tax law. So all we can do is stay ahead of what might be coming, and really empower ourselves with what we can do while the opportunities are still here.
This guy, you know him well, Jay Scott. How's the conference been so far? Like, what's been the biggest theme you've seen so far?
The conference has been fantastic. This is absolutely one of the best conferences of the year. And the theme this year for me is optimism. Everybody is feeling a whole lot better than they were feeling a year and a half ago. Everybody feels like 2024, 2025 are going to be great years for real estate, great years for multifamily. And so, yeah, the biggest theme is just optimism.
What has changed?
I think people are finally starting to recognize that we may be close to the bottom. So multifamily's taken a big hit over the last year, 2 years, 25%, 30%, 35% in some cases. But it's starting to feel like we've kind of hit that bottom. And from here, things should hopefully be improving.
Oh, I like the sound of that. Okay, but rates haven't changed. So prices have just come down enough to make the numbers work?
Yeah, rates haven't changed, but the Fed has signaled that they're not going to do any more hikes.
Yes.
And so while we may not see rates come down in the near future, I think a lot of the concern about rates continuing to go up has now been alleviated. So I think people realize that, it could be another 3, 6, 9 months before we see any rate movements down. But in that time, we're unlikely to see rate movements up, which I think is making people a lot more comfortable.
So what do you see as the opportunities coming in the next year or so?
So remember, real estate, buy and hold real estate is a long-term investment. And so you don't need to time things perfectly. You don't need to buy at the very bottom. If you can buy lower than the peak and you can hold for long enough, you're going to make money. And so I think what people are going to realize is 2024, while again, it may not be the bottom, or maybe we're past the bottom, we don't know. But if you're buying in the near future, and you're holding long enough, you're holding for the next 3, 5, 7, 10 years, you're going to make money, because even if we're not exactly at the bottom, we're going up in the next 5 or 10 years.
Thank you so much.
Absolutely. Thanks,
Optimism. I'll take it.
Optimism.
You have a different opinion, maybe because you're an attorney. Maybe optimism isn't in your blood. Just kidding. I'm just kidding. So that's why we love attorneys. You can see the things that could go wrong, and you protect us from that.
That's right.
So what are you seeing out there?
Well, what happened is that, my good buddy Jay Scott and I, we keynoted day one here, Best Ever, and the topic was really related to limited partners. And there's a lot of folks that are really frustrated who have been investing as limited partners into some of these syndications, because obviously some of these deals aren't going well.
Yeah.
And so to compound the problem, which, things don't go well all the time, but the issue that they're having is that a lot of the sponsors aren't communicating. They don't feel that they're getting the proper communication with the sponsors. So that's kind of a theme that I'm hearing from the limited partners. So, and I've been harping on this all the time. I always talk about, what to do when things go bad. And the first thing you want to do as a sponsor is to over communicate. Whatever your normal communication is, when you have bad news, I think you want to communicate that to your investors sooner rather than later, because communication does build trust. So from that standpoint, I see people a little bit concerned, or maybe frustrated is more the better word. But other than that, when I'm talking to sponsors and real estate investors as a whole and where the real estate market is, I agree that everybody's optimistic. We've kind of already hit the most of our downturns, and people are super optimistic for 24, 25, 26.
Well, I think the difference here from what I'm hearing is that people who are in deals that dropped by 35% or are dealing with these rate caps, and rate caps, of course, are insurance against interest rates going up, but they expire and then the rates go up and the payment explodes and people can't make the payments.
Yeah.
So there's pessimism for sure in people dealing with that.
Yes.
So what are their options besides walking away?
Well,
Or maybe that's the option.
Well, the option is, look, things, to your point, people took out these bridge loans back in 2021 that are starting to expire. Obviously, cap rates, they're coming due. And so there are some projects that are in trouble. And the way you fix this is generally through what's called a capital call. I mean, that's one of the mechanisms that you kind of get out of.
That means you put money, everybody puts more money.
Yeah, and that's not a fun thing to do. So that's
No.
one of the things also LPs are discussing. Is it worth putting, more money into the deal, or should I just cut my losses and stuff?
Yeah.
But you're right. We're talking about people who obviously are in deals that haven't gone well. For those who are not in good deals, the argument is this is one of the best times to get in because you're already buying at a 35% discount. So if you're going to get in, this is the time to get in. But there are people who have been in for a couple of years and they're in a little bit of a hurt.
Very interesting. So it sounds like at this conference, there's a lot of mixed opinions.
There's depending on where you are. If you're in a deal that you got in 2 or 3 years ago, then that's one feeling. But if you've got fresh capital to deploy, they're all salivating. They're excited because they're getting things that are on sale.
It's interesting. I've spoken at this conference every single year since its beginning, and except this year, you guys got the keynote this year. But there was a couple of years ago, I was the keynote, and it was just when Jay Powell was coming out and saying that they were going to begin hiking rates, and the room was full of optimism. At the time, this was a very robust time. Of course, in what was it, 2022? Oh, they're changing the lights on us.
That's
all right.
We'll go
How's
with
that going?
We'll go with it.
All right. So in 2022, I was up here basically saying things are about to change and you need to be careful. And this means they're pulling money out of the market. The Fed has been stimulating the market. Now that's reversing. And so there's going to be a massive impact. And I ended up being on the debate where the other side was like, oh, no, everything's going to be fine. But by the end, people came around. But it was so fascinating to see the shock in their eyes of like, what? Yeah. What do you mean things are going to change? Yeah. See, there's so much to love about attorneys. Thank you.
That's a great scene as always.
Okay. Mike Brockway, so good to see you here. All right, so what brings you to this conference?
I come to this conference because I love being around awesome people, and there's so much to digest here. I actually am good friends with Ben as well.
Yeah.
And so I've been here since year one with you as well.
Yeah.
Every single year.
Every single year.
Yeah, it's just a good time, good people, and just so much to learn.
What have you learned so far?
I think from staying on the trend of, LP, GPs, I think this year the solid operators are really gonna shine.
Yeah.
See who's handling tough situations well.
Yes.
Who's having their plan B and C's lined up and just doing a good job. And I think it's going to weed out some people.
Interesting. Okay. Do you see that as an opportunity then?
Yeah, I think so.
Yeah.
I think, a couple of years ago or a year ago, everyone and anyone was buying multifamily or doing big deals.
Yeah.
Because it's just easy to do well.
Yes.
And so I think it'll be good for the industry in a way. But hopefully investors still come out on the other side.
Yeah.
Okay.
Yeah, I mean, there hadn't been a downturn in a while, so people were getting pretty casual and a little loosey-goosey on their underwriting, and now they've seen that doesn't necessarily pan out. So what is your main focus going to be in 2024?
So 2024.
And 25.
Yeah.
Because 2024, we're halfway, almost through.
I think so right now I've gone pretty hard into, I'm just a buy and hold investor, and I have a lot of short-term rentals. So my focus is actually going to be to diversify out of that. My short-term rentals provide great cash flow. I've stick to what I've known, and I operate them really well. I think that's going to be the case for anything. Just for those investors out there that kind of do their own thing, stick to what you know, Don't try to pivot. Just do what you know and do it really well and just be conservative. But for me, I'm just going to sit on the sidelines, I think, see what happens, hold some cash, build up a cash position, and look for opportunities maybe in the next year or two.
In multifamily?
Possibly.
Yeah.
But
Okay.
I want to go from an active investor to more of a passive.
more
investor.
passive.
Yeah. So maybe
Okay.
multifamily.
Yep.
Spread that across a few different asset classes.
Yeah.
That might make sense at the time.
All right. Well, there's a whole lot more people that I'd love to talk to while I'm here, but it's super noisy in there. But just to sum it up, people are more optimistic, at least people who are in acquisition. There are still a lot of people struggling because of the high interest rates, and they're on adjustable rate loans in commercial real estate. If you have loans that are fixed, you're not having to deal with some of these struggles that they are dealing with in commercial real estate. And that is one of the things I love about residential. Well, I'm Kathy Fettke. Thanks so much for joining me here for Bigger Pockets on the Market YouTube channel, presented by Fundrise.